I want to talk about, Christian, one of your top picks. We were talking about your research with the bank, and you've singled out one stock that you think is a trade of the week. What is it?
Well, this is hot stuff. This is a small mid-cap stock in Switzerland. It's called Tecan. Tecan. It's laboratory automation. It's robotics. It has a lot to do with diagnostic, making laboratories more efficient. I think it hits structural trends on many levels, on the demographic side, on healthcare spending, on the rise of emerging consumers, which request a lot more in terms of capacity when it comes to diagnostics. So I think, given that this stock is one of the leaders in it, or the company is one of the leaders in its field, we think this is a very attractive long-term holding, and we highlight this as the stock of the week because we think it's unknown or largely unknown outside the Swiss market, and it's something where investors should be holding their money, buy it and hold it forever.
So you don't think it's a takeover candidate? That's not the play here?
Well, if it's taken over, usually it goes at the premium, which probably wouldn't make anybody angry owning the stock at this stage. So possibly there's some way to be found in a large context. But it's really, we're talking here about a niche thing. This is a niche market which is dominated by very few players, and whether this actually adds in a larger context of a life science portfolio for a corporate buyer. We rather doubt at this stage, but it's possible. It's possible.
Is there any concern about currency risk for investors outside of Switzerland? As we were talking about earlier, the Swiss franc is still overvalued against the dollar. It's quite a strong currency. Do you expect that to remain unchanged? Yeah, more or less. And really the thing to understand about Swiss stocks is exactly that they are used to currency appreciation. And, the way they build their value chains is quite unique because they always rely, with very few exceptions, always rely on a supply chain which is close to where the customers are. So you see headquarters, you see R&D being done out of Switzerland, so rather minor block in the overall context of costs, and the rest is actually where the demand takes place. So I wouldn't be too worried. There are translation effects, of course, if we see a major risk-off move in markets. Yes, of course, those stocks would also be hit. But that's why we think, this is something to hold over the longer term. This is something where you get the benefit if you stick to it and are not shied away by any currency movements.